For today's business brief, we're joined by Chris Richardson, Director at Deloitte Access Economics. Chris, last week was a massive week. We had the growth figures, also the rate cut. What's your overall assessment?
Look, the Australian economy has slowed. That's part of the reason why the Reserve Bank acted. Having said that, it really hasn't slowed all that much. Most of the damage is in and around housing markets, and most of the cavalry coming for the Australian economy, everything from interest rate cuts to tax cuts, loosening of the noose by the regulator around bank lending, all of those things will help, and a lot of them will help housing in particular.
Really interesting and extraordinary call to arms, if you like, from the RBA Governor, Philip Lowe. Have you seen a governor be so explicit in calling for the government to do more?
No, quite a standout set of commentary. And again, there is a brief opportunity. It's not just that you need that sort of call being made to Australia and Australians. It is happening in the immediate wake of an election where it's kind of easier for the public officials to let their views be known. The catch-22, the governor was entirely right. There are a bunch of structural and other reforms that Australia should do, but every hard-headed politician in the nation just listened to the result in that last federal election and thought small target, and here we have the Reserve Bank governor saying be a big target. He's right, but I suspect it's not going to happen. This week we have the jobs data, and obviously how the labour market is holding up is going to be something watched very closely by the RBA. Yeah, and again, we've been hearing not just the RBA decision and their reasons, but a speech from last week from the RBA governor. Yeah, the labour market, what's happening to unemployment, and also something called underemployment, a broader measure, is pretty important to where the Reserve heads from here. It's weakened just, having been the strong point in the economy for a long time, it's weakened just a little in the last few months, so they'll be watching what happens Thursday this week pretty closely, though, the heavy-handed hint remains that they're probably looking at least one more rate cut.
It's often said when China sneezes, Australia catches a cold. So we are looking at some data due out from China this week. What are we looking at in particular? Are the terms of trade still pretty good for us? Are we still exporting more to China than we're importing from them?
Look, absolutely. And if you think of the two things that could go wrong for the Australian economy, one is housing. It's genuinely hurting. The other is, those trade tensions, the global slowdown. Today we get the trade data out of China. But the unusual thing is that the worse things look for the world economy and trade, and indeed China, the better they look for Australia. China keeps pumping out that stimulus. That's aiding, its construction sector, the demand for steel, and that means Australian coal and iron ore. Amid a global slowdown, the world continues to give Australia a pay rise. That can't last forever, but it looks like lasting for quite a while yet, and it's pretty good news for us.